Today, Bitcoin crosses $47,000 to end the week. New York Attorney General Letitia James files an amended complaint expanding the office's lawsuit against Digital Currency Group. And Jacqueline Burns Koven with Chainalysis breaks down what contributed to total crypto ransom payments jumping to their highest level yet. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices marching higher in a big comeback to end the week. As of noon Eastern, Bitcoin climbed nearly 5% to trade above the $47,000 mark. At one point, it reached a high of about $47,700, a level not seen since January 11th when U.S. spot Bitcoin ETFs began trading. Ether rose more than 2.5% to $24.87, and Solana climbed more than 2%, trading at $105. For the week, Bitcoin and Ether are higher by 10% and 8% respectively. Positive sentiment appears to be returning as outflows from the Grayscale Bitcoin ETF continue to taper off. Crypto also catching a bid from the stock market, where the benchmark S&P 500 has been trading above 5,000 for the first time. Bitcoin is still the underperformer over the past 30 days, with a mild 1% gain roughly compared to the S&P's 5% and ETH more than doubling that for the same period. It makes sense to see ETH continue outperforming here, where markets have a healthy appetite for risk and stocks are running to record highs. Bitcoin, nevertheless, approaching a key resistance level at $48,600. Chart analysts say if it clears that, the door could be open for a new high above 50 and perhaps even an all-time high. The moves pulled crypto-focused stocks higher, with Coinbase climbing nearly 5% as of noon Eastern. CleanSpark soared more than 26%, getting an extra lift from the rise in Bitcoin after it posted better than expected results for its fiscal first quarter late yesterday. Okay, let's talk about the top stories. New York Attorney General Letitia James is expanding her office's lawsuit against Digital Currency Group, now seeking more than $3 billion in restitution for defrauded investors. The AG's amended complaint is the result of more investors coming forward following its October 2023 lawsuit against DCG, Gemini, and DCG-owned Genesis. That lawsuit accused both companies of misleading representations about the investment program called Gemini Earn. The office says the continued investigation revealed these additional investors were given false assurance that their funds were safe when they really weren't, leading to an additional $2 billion in assets that were lost. In total, the office says the companies defrauded more than 230,000 investors of more than $3 billion. Attorney General James said in a statement that the, quote, illegal cryptocurrency scheme and the horrific financial losses that real people have suffered are yet another reminder of why stronger cryptocurrency regulations are needed to protect all investors. We reached out to DCG for a comment, and a spokesperson called the development, quote, baseless, adding that the firm will, quote, fight the claims aggressively. Genesis had just reached a tentative settlement with the AG's office, which was announced yesterday. The settlement agreement revealed the crypto lender has agreed to stop conducting business in New York. That agreement still needs to be approved by the bankruptcy court. And we told you last week that Genesis also settled an SEC lawsuit over the Earn program and agreed to a $21 million fine that will be paid only if the crypto lender is able to fully pay back customers in its bankruptcy. Next, JP Morgan released a survey revealing that more than 70% of institutional traders aren't interested in trading crypto. 78% of respondents indicated they have no plans to trade crypto in the next 5 years. That's an uptick from 72% last year. Among those who did show interest, only 9% are actively trading digital tokens. The annual survey, which includes responses from more than 4,000 institutional traders across 65 countries, also asked about the most influential technologies that will shape the future of trading over the next 3 years. Blockchain and distributed ledger technology dropped to 7% this year from 12% last year. Meanwhile, AI, which tied blockchain technology just 2 years ago at 25%, took the lead as the most influential technology at 61%. All right, for our main story, this week, blockchain analytics firm Chainalysis revealed that crypto criminals extorted a record amount of money from ransomware attacks in 2023, more than $1 billion in total. So Crypto World's Talia Kaplan spoke with Jacqueline Burns Koven, head of cyber threat intelligence at the blockchain data firm, to discuss the findings of the new report. She also weighs in on whether we can expect the upward trend to continue in 2024.
This week, Chainalysis revealed that ransomware crypto payments hit a record high in 2023 after experiencing a drop the year before. What do you attribute this rise to, and what stood out to you from your findings?
Right. So 2023 was not just an increase over 2022. We had a record setting year in terms of ransomware payments. We identified at least $1.1 billion in ransomware payments, and that's a conservative estimate. So not only was it a rise, it was a near doubling of the year prior.
So let's take a step back for a second. Why do you think it dropped in 2022?
Sure. We attribute the drop in 2022 to a confluence of factors. We attribute that to victims being better defended and maybe negating the need to pay when they were attacked by ransomware. We've also become privy to law enforcement investigations and infiltration of ransomware groups like Hive that also averted payments. And what we can't discount is the fact that the Russia Ukraine conflict took ransomware actors that might be involved on either side of the Russia Ukraine equation out of commission. They were diverted, distracted, and displaced from their financially motivated activity on account of that conflict.
So, according to the report out this week, Chainalysis said that some of the attacks were carried out by exploiting the file transfer software MoveIt, which affected companies like the BBC and British Airways. How were the attackers able to carry this out, even?
I think the most emblematic attacks of 2023 were unforeseen attacks like we've never seen before, focused on file transfer protocols and zero-day vulnerabilities, which had previously not really been leveraged that much in ransomware. And that enabled groups like Clop to attain victims, hundreds, thousands of victims from a single vulnerability. And so that certainly contributed to the rise we saw in 2023. And I think we should continue to look at 2024 with the same lens that threat actors are going to adapt, and we have to understand what's in our tech stacks so that we understand how we can patch vulnerabilities, prepare our defenses, and prepare in the event that our business or government entity or hospital is attacked by ransomware.
Do you think the increase in ransomware attacks in 2023 is in large part because of the exploits on MoveIt specifically? Did that account for most of the attacks last year?
I would say the MoveIt attacks certainly did make Clop the predominant player during that period that it was exploiting those. But what our data really shows is that there are payments for smaller amounts for smaller victims, and there's been attacks by more sophisticated actors like Clop which we call big game hunters, able to attack larger victims for larger payouts. And I think what's markedly different about 2023 from years prior is that we're seeing more victims paying ransoms over $1 million. So at least 75% of total ransomware volume is comprised of payments of $1 million or more. And that's very much an increase from years prior.
So, Chainalysis warns that even though 2022 saw a drop in ransomware payment volume, the overall trend line from 2019 to 2023 indicates ransomware is an escalating problem. So, what is your outlook for these attacks this year? Do you think the trend will continue to move higher?
I think we should all certainly be on alert. No company or entity or business is immune to these attacks, unfortunately. I think what makes me hopeful is that we are still seeing victims less inclined to pay, whether that's out of sanctions concern, whether that's because they've defended or prepared backups that negate the need to pay. And I am hopeful for continued law enforcement operations. And I think what the data really shows is that utilization of blockchain forensics and blockchain intelligence to go after different facets of the ransomware supply chain, not just the extortionists themselves, but also the tools and services they rely on. So it really does take a full government approach, as well as victims, organizations, incident response firms, cybersecurity firms. And I will also highlight the role cryptocurrency exchanges have. I think what comes out in our data this year is that ransomware actors are adopting new cryptocurrency services to launder their funds, because we're seeing cryptocurrency businesses are developing more robust AML KYC policies that are preventing ransomware actors from finding safe haven in those exchanges to convert their crypto to cash.
So, expanding on that, what else do you think can be done to try and curb the problem?
I think, in addition to victims being better prepared and having a plan if and when a ransomware attack occurs, I think reporting is the next best option. We can't disrupt what we cannot see. And really, the beauty of the blockchain is the ability for private sector businesses and law enforcement to communicate and be able to disrupt these payments and impose cost. Increase the risk of getting involved in ransomware and make it less profitable.
So, where are these payments going exactly? What did your research show you?
What was really unique about 2023 was that we saw more diversity in their off ramps, and we saw more exchanges than in years prior, but also the addition of new services like bridges and gambling to the mix. And we chalk that up to a couple of different factors. One, certainly law enforcement takedowns and also sanctions of cryptocurrency services that were facilitating the laundering of illicit funds, including ransomware, had taken offline some of the mixers and exchangers that were previously used prominently by ransomware actors. And then I'll say, secondly, I think that the diversity of the laundering off ramps points to new entrants in the space. I think it's clear in our data and other research that there are new threat actors engaging in ransomware that are lured by the promise of a good return from the ransomware business, to say the least. But I'll also give credit to cryptocurrency businesses that are employing more robust AML KYC, and ransomware actors have had to adopt and find new off ramps when they find that an exchange is no longer willing to process their funds.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.